Hello, everybody, and welcome to this episode of Savvy Investors at VectorVest. Today, we're going to talk about a topic that I think is super important, and that is number one is learning how to analyze an earnings report, but number two, learning to analyze the right earnings report. Today, I'm going to walk you through step by step, number one, how to do all of that, but number two, how to automate it. That is the key thing, how to use the VectorVest system if you have it to show you how to analyze the earnings, but also to automate your processes away, as well as showing you how to set all of these things up so that when you open up your system, things are ready to go. Now, if you don't have the VectorVest system, that's absolutely fine. You're more than welcome to our live stream here today. And of course, if at any stage you would like to try out the VectorVest system, please do go ahead and take a trial. If I could, I'm just going to ask Joy here to drop the link for the trial into the chat, just in case anybody wants to follow me along exactly what I'm going to do today so that you have what you need. But even still, if you don't, that's completely fine. We will show you exactly what you need to do, as I say, and how. So before we get started, a little bit about me. My name is Susan. I am the host of this show called Savvy Investors at VectorVest. And I started this show at VectorVest to be able to help people to understand how to navigate the stock market, but from my personal point of view. And what I mean by that is I'm one of these people that thinks earnings reports are such a fantastic information. They're a real-time insight into companies and into industries and into economies. They're a great education from the point of view of how business works and as close to the bone as you can get when it comes to understanding what a company values and how they are going to go ahead and implement tactics on top of strategy. However, they can be full of jargon, they can be full of numbers, and they can be full of acronyms. So that's why we wanted to create a show that makes them very accessible. But I've also been analyzing earnings reports for a while now, and I do find that you can get sucked into looking at lots of them or without having any rhythm or consistency. That's why, particularly for our show today, I wanted to show you how to understand which earnings reports to look at. And as I say, because we're all very busy, how to handle or how to automate that. Now, before I get started, I would love to know where you are tuning from. I am right here delivering this live from Dublin, I should say, and I'd love to hear where you're tuning in from at the moment. So I'm just going to take a look over here, and I see we have VV Brooklyn in the house. Okay, that's great. That's great to hear that somebody's joining us from Brooklyn. We also have Bill G, who says he is joining us from Utah. Rusty loves my accent. I hear that all the time. Thank you very much, Rusty. I also, now Christopher says he has issues downloading the program by the website, and the MacBook app just works fine though. Okay, if you have any issues, send them to support@vectorvest.com. They will take care of you. Okay. Now, who else have we got? Brandon is joining us from Ohio, one of my favorite states in the US. New York, Napa in California, Connolly in Florida, New York. Greetings from New York. Lots of people from New York today. Okay. Hello from Boston. Ron is joining us from Wilmington in North Carolina. Ah, Devienne is joining us from Singapore, and let me know if I pronounced your name correctly. As Dashi is joining us from Alabama. We have people here from Houston in Texas, Winnipeg, Nova Scotia in Canada, Camross in Alberta, Canada, Arkansas, Cincinnati, Ohio. I was in Dublin, Ohio a couple of weeks ago. I thought it was picture myself in Dublin, Ohio. I'm in Dublin, Ireland. Where else have we got? Atlanta, New York, Knoxville, Milwaukee, Wisconsin, Virginia Beach in Virginia, Texas. We're in beautiful Oregon coast. John, you're right. I agree. Haven't been there, but I agree. It's important when we feel somewhere is beautiful, tell the world. We also have Christopher. Oh, thank you. Yeah, Christopher says he's joining us from Greenville in South Carolina. Boston, South Carolina, Francisco from Chicago. And that is great. Glad to hear all of that. Really, oh, and also we have somebody here who's joining us from. Okay, super. Well, keep them coming. I'll be all of the interactions that I have with everybody here right on the show. I love them to be interactive. So please do keep your comments coming. Now, I will let you know that based on the way my setup is today, if you see me looking down and to the right, why the reason I'm doing that is that's where your comments are. So if you do see me doing that, just want to let. Okay, so let me just talk you through the way today is going to run. right? I'm going to start off by showing you a search about how you can find the latest earnings calls. Okay, so we have our own earnings calendar within VectorVest, but I'm going to show you how to build in a search so that you can find your safe, your undervalued stocks within it at the same time. It does take a little bit of nuance, so we're going to spend a little bit of time working on that. And then what we're going to do is I'm going to take you through how to generate that search, and then next, how to look a week ago if you had done that. And if you had, let's say, bought the top 10 stocks at the time. And when I say top 10, I'm going to determine what I mean by top. How would you be getting on now? So that then if you want to test out this idea over any period of time, a week or a month or whatever, you can. Then what I'm going to do is from there, I'm going to move into looking at the earnings reports themselves, and I'm going to show you certain things that I look out for. There is, of course, breaking news happening around us all the time, so we're going to build all that in, factor in a couple of things that are happening today. For example, CRH's earnings are out. And I'm just going to show you what to expect, what to look for, and where to get straight in. So that is my plan. Before I get started, I do just want to ask, does anybody have any questions that you wanted to make sure that I just placed there in the chat that I can take a look at? Anything about VectorVest, anything about earnings reports, anything about what's going on at the moment? If there is, please do pop it into the chat there so at least I can see it as I'm going along. As I say, when I turn to the right like that, you'll know that I'm checking it. So any burning questions, please do pop them across. Okay, what I'm going to do now is I'm going to go straight into the VectorVest system. Up there at the top right hand corner for anybody who's joining me live, you can see the link there if anybody wants to follow me along and move through the process of taking a trial. You can absolutely. So let me pop on over then here. I am going to set up my system. Now, there's a few things I've done earlier that I'm going to go back to the start and show you how to do. So let's go ahead and do that right now. Okay. Now, what I'm going to do here is I want to first of all show you how I can create a search that can help me pick up on the stocks that are having earnings in a couple of days' time. Okay. So what I'm going to do now is this is one that I created earlier, but I'm just going to delete both of what I've got here and I'm going to start from the start. When you take a trial of VectorVest and you go in, you're going to be greeted by a home screen. If you go on to become a subscriber after that, you'll still go in here to the screen. And this home screen is you can completely optimize it for how you want it to look yourself. Now, as you can see, mine is pretty blank at the moment, and that's because I was taking away widgets, doing them all up, etc. But I am just going to, let me see here, this is not what I, or instead, what I'm going to do here is I might, for example, have on my color or on my home screen, I might have strategy, might have top items of VectorVest plans, etc. That's more likely to that is more likely to be what it is that you. But where I want to bring you is over here to unit. Let me show you the search over here that I built. Let's say that today I am, like you are today, interested in finding earnings reports. No, I'm interested in finding stocks of companies that are going to be announcing their earnings in the next, I'm going to say 5 days. How could I find them? Now, then I also want to find stocks that are releasing their earnings reports according to a certain set of parameters. Parameters that I'm going to put forward here is safe and under. How do we do that? So what I'm going to do is I'm going to go to stocks, going to go to capital appreciation, and I'm going to click earnings date. Okay. Then I'm going to specify how many days I might like to see in the upcoming period. So I'm going to say, for example, 5 days. 5 days and okay. So if I run that search, we can now see here that I have lots and lots and lots of earnings that are coming out, but a lot of them are quite far away, right? Because all I said was I wanted the stock earnings date to be greater than 5 days out. So I could have the 13th of October, the 12th of September, the 2nd of November, etc. Right? So they're quite far out. So instead, here's what I'd like to do. I would like for my earnings also be less than the 30 days. Okay. Okay. By the way, of course, just to point out something that's probably obvious to a lot of you, and that is my earnings date, my dates are set up in a European format. Of course, they would be different when it comes to all of you who are joining me from you. Okay, now, interesting here. Christopher asked about NVIDIA. I'm going to talk about NVIDIA. He said, why did NVIDIA gain so much in the after hours and then lose a great bit of those gains so far today? I've been watching NVIDIA throughout the day, actually, and NVIDIA had was doing really, really well this morning, exceptionally so. It was up about 4%, I think, when it opened on trading first, but we certainly will get to that. Okay, so as I follow on through from here, you can see here that now I have stocks whose earnings date for the earnings release is going to be out within the next 5 days, or at least less than the next 30. But that's not all. I don't just want to see what stocks of earnings. I want to see what stocks of earnings that are coming out in stocks that have parameters that I would like. So I'm going to look for VST to be greater than 1, for example. Very briefly, for anybody who's not familiar with what that means, it means that the value of safety and timing is above a level of 1. V is for value. Value is long-term price appreciation potential. S is safety, consistency, and predictability of financial performance. T is timing, that is direction, magnitude, dynamics of. Let's just say you don't know what any of that means. Boil it down even further. Combination of fundamental and technical indicators baked into one. Let me boil that down even further. Above one is favorable, below one is unfavorable. And so what I'm looking for is I'm looking for a combination of technical and fundamental indicators that above one, that are together above one. Okay, so we have this. And one last thing, I also would like, for example, RS, particularly want the consistency and predictability of financial performance to be better than 1 point. Okay, here we go. We've got Lululemon here. So Lululemon's earnings are out. Broadcom, we can see their earnings are out. Salesforce, their earnings are out. Adobe, Casey's, Five Below Inc., etc. So now you can see, I can look at this earnings data and I can say, okay, right, these are stocks that I might be interested in. Particularly, I might be interested in them in the first place because of their value, safety, and timing. And you can apply any other parameters that you might like in here. Maybe you want a PE ratio above 20. Maybe you want the growth rate above 25%. Maybe you want a comfort index, that is the long-term, or sorry, the ability to resist severe and or lengthy price declines. Whatever it is you might want, you can always put those in. But the key thing I'm talking about is just making sure that the earnings calendar, you can specify time that. Now, before I go on, because the next thing I am going to go on to is I'm going to show you what would have happened if we applied this a week ago. And let's just see how things would have turned out. Because people often say to us at VectorVest, oh yeah, I know I could do that now, but what would I have done, or what was VectorVest saying a week ago? So I'm going to show you how to go back and test that out. So let's just put that to the test. But before I do, does anybody have any questions that you want to ask or anything that you want to run by me? Stage. Let me just pop over here. News said there was no money to receive the good earnings news from NVIDIA, which was going to repurchase and inevitably lower its price, which drove the market in the trade. And Brandon said, because the market sucked the life out, like most stocks today. Okay. All right. I see the conversation about NVIDIA is continuing, and that's completely fine. As I said, I particularly want to show you a couple of things related to that in it. Okay. Looks like we're all good. Okay. So what I'm going to do now is I'm going to change one thing. I'm now going to change the time of the search. I'm going to bring it back a week. Okay, bring it back to 1 week. On the search now. Okay, now these are the stocks whereby a week ago these were 5 days out. Okay, so we can see here now we have RH in here. They're reporting their earnings today. We have Lululemon, again reporting their earnings 31st of August. We have NVIDIA, who reported on Tuesday. We have Lowe's, we have Broadcom, we have Salesforce, we have Adobe, we have Analog, we have Casey's. Okay, Workday is also out today, right? So we can see here, certainly all of these prices here are live, but what I would like to do is I would like to go back and I would like to look a week ago see how we were doing. So if we were to take this list, because this was a week ago, right? This was a week ago. If we were to take this list a week ago, let's see how the stocks would have performed then. Here's what I would do. So I'm going to highlight them all. Okay, highlight them all. I'm going to right click. I'm going to add to watch list. Okay. And then what I need to do is I need to put them into a group. So I'm going to add them in here into my watch lists. Say this is savvy investors, savvy investors. I'm going to say August. Okay. Now let's go back in time. Let me pop back over here to viewer. Let me now pop over here. Here we go. Savvy investors, August 20. So this was the list that would have generated, and I'm using the sort of where I would have done this back a week. However, what I'm going to do is step back in time, 17th, and take a look and let's take a look. Right, so Lululemon is up there at the top. We have Avgo from Broadcom, or we've Broadcom, we've CRH, we've Nvidia, right? So all of the stocks here in the way we saw them. But what I've done is that I've gone back in time on the 17th, and I've just seen what is who is on that list at the time. And what I've done is that I have just looked at, if I had bought these stocks a week ago, how would I be performing now? So therefore, I know the earnings are coming up. How would I have been performing by now? See here, these stocks are up 2.05% on average. Nvidia was there at 10.53%, and that is double the performance of the. But naturally, that's over a very short period of time. And you can go back and you can test this out at any stage. The point I'm making here is using the VectorVest system, we can, first of all, pick out the stocks where their earnings are coming, but then layer over top of that the various different parameters that matter to you. So safe and undervalued matter to me. That's why I have those in there. Then what I can do is run the search and then go back a week ago, run it again, and then compare how I would have got on over the period of time. I'm just going to run through that one more time so that everybody can get a sense how exactly to do that if you wanted to follow me. I'm going to go to unit search. I put in the parameters of whatever it is that I'm looking for. In this case, I'm looking for my earnings report. I want it to come out in, let's say, 5 days' time, over the next 5 days, but less than the next 30. Or else I can, let me reduce down. Just let's say I wanted it over the next, oh, and, oh, gone. Okay, let me show you how to do that again. So stock, capital appreciation, earnings date. What I want is, I want it to be 5 days. Okay, 5 days out. Okay, and run. Okay, now there you go. I have an even narrower group. Here's Lululemon, Broadcom, Salesforce, etc. If instead of changing back here to a week ago, I can always literally go back in time to the 17th, press OK, run the search again. What have we got? We are searching. Here we go. We have CRH, Nvidia, basically the same stocks that I showed you the last time I did this, but CRH, Nvidia, Lowe's, Analog, Workday, Intuit, Toll Brothers, Lancaster. But what I do want to make the point is maybe when I looked at this list of stocks, maybe I wasn't so happy about the holds. Maybe I wasn't so happy about the fact that some stocks had an RT below 1. So in this case, if RT is below 1, okay, if RT is below 1, it means the direction, magnitude, and the dynamics of this share are moving in the wrong direction. Let me just take that off as well. This is what I mean by really and truly tune your search to what it is that you want it to. I want the RT to be 1. Okay, run the search. Okay, here we go. Now I'm down to 6. So these are the stocks that I might be in. As you can see here, 24th CRH is around today. I'll be talking about that. 22nd, 24th Workday is out today, etc. All right. So again, Here's what you need to do then is highlight all these stocks, right click, and I can move them into a watch list. Add to a watch list. Then over here, I can call this whatever I would do, and then I can go over and I can keep those in a watch list or I can monitor them, etc. Just very quickly, let me just run this test. I'm going to quick test all of these. I would have looked at these on the 17th of August. All of these stocks had earnings coming out. At the time, the three of them had buy ratings. All of them were above VST at above 1. Relative safety was above 1.2. That means it had consistency and predictability of financial performance above 1 and above 1.2. The earnings date, yep, we've already discussed that, are between 5 and 10 days away. And then I also want the momentum in these. Okay, now, how would I have done in this case? Better. Look at this. In this case, I would have had stocks where, again, we have NVIDIA as an outlier, CRH, which is slightly up. They're all up, but CRH is slightly up. CRH, by the way, is a company I'm very familiar with because it controls things. It's the largest company in Ireland that has been listed on the Irish Stock Exchange. I'm very familiar with that. So here you can see 3.74%, and of course the price change here in comparison with the 100%. The other reason I'm bringing this up is if, like me, you are somebody who likes options, these may be opportunities perhaps to sell puts. You're even more aggressive, you might want to buy calls on them. But this is a really good way that you can narrow down types of stocks that have earnings coming out, that have the valuation, stock analysis parameters that suit. Now, from there, I'm going to leave VectorVest, and what I'm actually going to do is I'm going to go into the earnings reports themselves, and I'm going to highlight a couple of things that I always look out for. I'm going to go to CRH, NVIDIA, and then I'm also going to actually show you Netflix, simply because it's a business that generally everybody understands. If I get into NVIDIA's business or I get into CRH's business, it's very complex. For example, I've been on the Microsoft earnings call. You look at the Microsoft business itself and the cloud business, and you look at LinkedIn and you look at the advertising in LinkedIn. There can be a lot of complexity. Netflix is a pretty straightforward business. So I'm going to use that as an example to show you one particular. Okay, let me just hop on over here and I'm going to take a look at the chat. And Jack is joining us from Winnipeg, which is fantastic. And Santial is saying hello. And that's here. All right. Now, I'm going to start over here. I'm going to start off CRH, right? So CRH's results came out today. The press release and the earnings call happened at 1 p.m. British summertime, which is about nearly 3.5 hours ago. So CRH ran their interim results. As you can see here, it came out on the 24th. Okay, so what are the things that we look for? Bear in mind, when you get the press release from a company, it's likely to focus on the good stuff. And what you need to do as an investor is understand what drives the business, of course. Generally, three things: revenue, profit, or earnings. So it's good to have an understanding of those, but it's also good to have an understanding of what is being put forward as a positive and what lies beneath. I think it is important to be able to. So I'm going to help you with. Now, here in the case of CRH, for example, let's just take a look at how the market is reacting before we get into anything else. I'll pop on over here to viewer. I'm going to open up CRH's. Okay, the price is, and this is live, okay, it is now 25 past 11 Eastern time. And so what you can see here, my system isn't live. This is CRH. It is listed in, if I'm correct, that is New York. The reason I'm is that I'm just, the reason I want to check this is NASDAQ is reserved for technology companies like Salesforce. So anyway, it probably doesn't matter. The main thing is that so far this stock is currently down 2%. Okay, so let's just see what information the market is reacting to. Strong H1 delivery, further growth across all key metrics. Interesting. Okay, that's a good line to start off with. $600 million of acquisitions to date, robust pipeline of opportunities, strong and flexible balance sheet. What I understand that to be is that there are plenty of assets on the balance sheet. I understand flexible means that cash can be deployed to acquire either a company or another asset, etc., or to pay down debt. Significant optionality for future value creation. That could mean a range of different things, and I don't want to speculate yet. Overwhelming support for transition to US primary listing. Now, I have to tell you, you're getting it from somebody who is in Ireland, based in Ireland, conscious very much of Irish business, etc. Everyone in the business community is talking about this, is that a CRH is looking at transitioning to US primary listing and away from the Irish stock market. The business is doing really well in the States, as we're about to see, and in particular, it is now going to be effective on the 25th of September. Okay, so the US's gain is the Irish stock market's loss. Increasing cash return in term dividend is up 4%, and there's a $3 billion share buyback underway. What does a share buyback mean? It means the company is buying back its own shares because it feels there is value available to them. And also, of course, then that has the impact of increasing the earnings per share. So let's say I have a company, it's listed. We make $100 billion in earnings. There are 1 billion shares in issue, and therefore the earnings per share is $1 per share. Okay, so better right. Sorry, $100 per share. Apologies. So if we make 100 billion, we make 100 billion, and then we have 1 billion of shareholders. That's right. Then we have an earnings per share of $100 a share. In other words, you take all of the earnings and you divide them by the number of. If the number of shareholders decreases because the company buys back its own shares, of course that lifts up earnings per share. Wait. Positive outlook the company has, and it expects a full year EBITDA of that's circa $6.2 billion. Okay, what is EBITDA? EBITDA is one of the most important numbers that analysts really look for. EBITDA is earnings before interest, tax, depreciation, and amortization. EBIT over here, EBIT is basically what does the company make before it pays out, before it starts repaying on loans, the interest on loans, and before it hands over taxes. Because of course that is ultimately the profit that the company makes before it needs to pay out on those non-operational factors. Then we've D&A. D is depreciation on tangible assets. And so if, let's say, CRH has plenty of buildings, I drive past it from time to time. So when it depreciates its buildings and when it amortizes its intangible assets, let's say like brand or like patents, etc., then they are, of course, those outlays are made at the very beginning. So if it buys a building, it pays over money at the beginning. And then after that, it uses the building over a period of time. So the amount of money that is spent is all spent up front in capital, but that capital expenditure is expensed into the profit and loss over. So by adding back in depreciation and amortization, then what you're doing is you're bringing back in the non-cash expenses back into the operation, or looking at EBITDA. So then as a result, you're looking at the amount of money left over at the end of a year, but before the non-cash expenditures of depreciation and amortization, before the interest. All right. So, of course, as you can see here, this is CRH's press release. If we go down, we can see a lot of on the proper metrics that people want to see. Sales indeed are up 8%. EBITDA is up 14%. And this is H1. Let's just bear that in mind. This is the first half of the year. Operating cash flow is up 61%, and earnings per share up 31%. Okay. So, and then if we scroll on down, we can see the full release. And this will give us the full level of detail. Now, what I want to do though is I do want to point out that this tells you the short version of what the company wants you to know. And of course it does. But as I look up here at the top right hand corner, in Dublin, the market is closed a minute ago. The market's down 1.78%. In London, it's down 1.53%. They're listing in London at £44.46. And in the States, it's down 2.9%. So you might say, why? Like, I mean, this is a good set of results. And that might be because the set of results that were delivered, maybe they disappointed in comparison to an analyst. And this is what I find a lot, is that I listen to an earnings call and they're full of enthusiasm. And what you find then is that what they put forward, of course, is going to be the story of the business, good story of the business. But behind that, then there may be something else that. So, for example, I have been in earnings calls where the CEO and the CFO talk about their increase in revenue, the ability to create value in the coming quarters, increase in product usage, increase in rollout, decrease in costs. And then what you really hear, so fundamentally, maybe earnings are down, or you might hear that the ability to deliver upon one capital investment happening as fast, or something else like that. That's what can often happen. So read the press release, yes, or the interim results, the key highlights, read that, yes. But in order to get in behind the figures, there is a little bit more. Okay. So what I'm going to do now is I'm going to bring you in here into Fabrinet's fourth quarter 2023's results. So this came out last first was Monday. And I wanted to point out here that you can see that I can listen back to the webcast. I can look at the investor presentation, but I can't look at the transcript. Can't look at the transcript. So I just want to bear that in mind. When I went on to looking at Fabrinet's investor relations, this is what I was looking for, or this is what I found, and I didn't see. If you scroll down here, you can see that is the case. They don't give the transcript. So I'm going to show you where to find that in a little while. But Fabrinet, we just take a look over here. Just going to show you Fabrinet. And FN. Oh, I know what I'm doing. I know what I'm doing wrong. Let me just go to the viewer home. Sorry, I was still in the watch list. I needed to add it. Now, let me do that again. FN. Okay. Let me go to a week ago. Yeah. So a week ago, you can see here the relative value was at 1.49, relative timing is at 1.02, EST is at 1.27. And if you look here, what particularly struck me was the difference between the price and the value, right? Now, it struck me because there's a significant difference between the two. Then, as soon as I looked one column to the right, then we could see that that aligned here, the long-term price appreciation potential significant. So let's just look at what happened when the earnings came out. Right, you can see here there was a really big gap up, right? Really significant here. Stock was trading at $116 before the earnings. It's now up and it's trading at $160.49. Now, I will say this actually came up on a search that I had, that I was running that very same search because BST was very high. The RS was above 1.2. And also so this actually appeared on my this appeared on my search a couple of days ago, and I was watching it anyway. I was watching the impact of what had happened, and I mean Fabrinet had very significant set of results as well. I'm just going to just briefly give you a summary here. So the revenue grew by 12%, the earnings per share grew by 25%, the gross margin was at 12.5%, the share buyback was for 488,000 stocks, $100 million authorized for share buyback next year, etc. So they're the type of things, of course, that move the market. Market wants to know fundamentally, did earnings rise? Fundamentally, did earnings rise? Secondly, did earnings rise in comparison to what the analysts expected? And bear in mind, it's not just the analysts are coming up with these figures on the phone. When you join an earnings call, then the company will set out full year guidance. It will say over the full year, we're expecting over, or we in the last earnings call said we were going to deliver X, or they more commonly say we'll deliver between a range of X and Y. They'll point out where they are on that and what the new guidance is. All of that feeds into it, but earnings per share is really matters to the market. And of course, something like revenue is a predictor if they can manage their costs. Share buybacks, that is a way in which that you can boost the earnings per share of your company by simply buying out some of them. They're the types of things that matter in the market for sure. But I did want to point out that you might sometimes have to go further afield in order to find information that you might be looking for, like transcript. Which brings me to NVIDIA. So NVIDIA's earnings were out this week. I was listening to a podcast about NVIDIA on Tuesday morning, and Nvidia seems to be, are they calling it now the godfather of AI? I think that's what Nvidia is being called. Of course, a really rocketing share performance this year. Let's just put up Nvidia. Okay. Oh, graph it here. Okay, so there you go. I mean, over the past year, this time last year, Nvidia was at $171. Now at 470, so 478, and of course, then add the impact of the earnings. Looking here at the earnings, of course, they're jumping all the way up. RT here has been above one. RT has been above one since January. PE ratio is reflecting a lot of investor confidence. Growth rate of the earnings are up at 10%. And I think from what I'm hearing now, if I am correct, that JP Morgan is now looking at AI indices and saying then there's AI minus or excluding Nvidia. So it really is becoming a very powerful stock. If you want to take a look at the Nvidia earnings transcript, this is my point. This is what I want to say to you is here's how you find it. First of all, you'll probably need to Google it rather than find it in the investor relations. Some of them have the transcripts there, not all. But what I do is I Google the, let's say, Nvidia earnings transcript, and then often you'll find it from there. I found it here, for example, on Motley Fool. But I will say this after you read the main numbers, because the main numbers again are going to give good insight, but they often are the story that the CFO, the investor relations forward, and it paints often a very good picture, and that's brilliant. But what I would say then, though, is it's a very good idea after that to certainly read the transcript of the call, but go to the Q&A. Go to the Q&A. This is often where you can see what the analysts spend a lot of time poring over the details and where they're looking underneath the hood. And this is their chance to ask the team. Also, in my experience of listening to earnings calls, often what you'll hear as well is when they will quote back over a series of previous calls. So you might be looking at Nvidia's earnings for the first time. And an analyst, though, has been at every earnings call for the X number of quarters. So sometimes you'll hear people say things like, 2 calls ago or last quarter, you said X. You're now saying that expectation has been dampened. That's when you can see in underneath the press release. And you can see here, for example, um, often they'll thank them for taking the question. Congrats on the success. You can see here, key part of your success in the market is delivering the software ecosystem along with the chip and the hardware platform. Two-part question. Could you help us understand the evolution of your software ecosystem elements? And is there a way to quantify your lead in this dimension? Like how many person years you've invested in building it? Part two, I was prepared to share with us your view on what percentage of the value of the NVIDIA platform is hardware differentiation versus software. These types of questions come up in the Q&A, but they won't be just simply putting forward this type of thing. And of course, if you're not very familiar with the business, then you may be in a position where you're wondering, how do I understand all this? And I've often found myself going off Googling certain terms that are only specific to that business or that industry. This is where the brilliant education comes from, in my opinion. It's brilliant to, like so many people, and an economist like myself will be looking at economic reports or economic outlooks, and I speak about these and I deliver these myself, but a stock's earnings results and the conversation that's had between analysts and the CEO and the investor relations team or the CFO, this is real time. This is real time, and these people need to be on the ball. So this is where brilliant education comes from. Now, this is just moving on over here then to over here then. I just want to take you through an example of a really clear business or a really straightforward business name, Netflix. So what I'm just going to do is I'm just going to show you what happens in the Q&A. Oh, let me see here now. I'm going to scroll down here to Q&A, and let's take a look at some of the conversation. Okay, here we go. For example, here we go. Jessica Ehrlich here from Bank of America Merrill Lynch says, so can we talk about the use of free cash flow and maybe possibly M&A, mergers and acquisition? I mean, there's a lot of distressed assets in media land, maybe the lowest multiples in memory that we've seen. Which assets might be interesting to you? So I was on the last earnings call for Netflix, and a lot of the focus was on the labor issue of the strikes of producers, a big focus on password sharing, big focus on where future growth is going to come from, particularly when it comes to advertising. There was also the conversation around taking away the lowest package, the lowest tier pricing, and instead replacing that with an even lower one with advertising, or else a higher one, moving people up the chain. Then there was also the conversation around who is the most engaged and who is the most familiar with the platform. So I was on that last earnings call, as I say, and that was the focus. But as you can see here now, they're talking about, okay, and the great free cash flow and possible M&A, where what assets might be interesting. So as you can see here, just said we've always looked at these things in terms of the opportunity for IP, property, versus those assets. Some of those assets are stressed for a reason, and so we're mostly looking at them. We look at our M&A activity would be around IP that we can develop into great content for our members. See, this is what I mean is that we get a sense of what's really important in Netflix. When you look at Netflix, the business, you compare it to Disney Prime, for example, or you look at any of the streaming partners, streaming competitors, one of the ways to differentiate is, of course, in their content. So what this does is that it just gives us a sense that we're looping back to that value proposition time, as it says here with the real strength of our business. That's, I would think, we've traditionally been very strong builders over buyers, and that hasn't fundamentally changed. But there are opportunities, access to pools of IP we could develop into. Sometimes they go on then and they go on to ask another question. And as you can see, then they go on here, they talk about global titles and so on like that. So I personally, if I have very little time, that's what I do is I jump on to the Q&A and I get a sense of where people were trying to get in on wood. Then actually I go back, I look through it all and I read. That's often what I find is really to me. So on that note, I am now at the end of our episode where I wanted to talk to you about number one, how to find those stocks where the earnings reports are coming out, but they lead in with the other parameters that you want. How to automate that. Very simple to automate that. Build it in Unisearch and then go in and look at it whenever you want. And then those stocks will pop up in front of you. Like I say, Fabrinet popped up for me a couple of days ago. CRH obviously was there today. Nvidia was there a couple of days ago as well. Um, Lululemon has now appeared on that. So it's very simple for me to find the stocks that I'm interested in anyway, and then look at the earnings reports. Then the second thing is, yes, go in and take a look, first of all, at the main results. But if you want to get in under the hood, go to the transcript, go to the Q&A, and then start. Okay, now let me just take a look over here at okay, great stuff. I see a couple of questions here. My VectorVest search using the same parameters did not yield the same results as yours. Right. One thing I do want to point out to you is bear in mind we are live. It is now 11:45 a.m. Eastern time. The system on VectorVest is real time. So that could be a reason maybe a stock has changed. And remember, I put in VST above 1 in or S above 1.2. Something might have changed during the course of this episode. Speaking of which, can I say this to you as well? Please do like and subscribe to the channel. And the reason I'm saying that is generally when any one of us are on, whether it's Glenn, or whether it's me, or whoever it might be, you get an alert if you have downloaded the VectorVest app, or if you've pressed the bell button on YouTube, you will get an alert whenever any of us are live. And the reason in particular that this viewer is seeing different parameters. If I was to rerun my search now, it probably would have the same identical. We are live here. And as a result, you get the cutting edge, bearing on whatever breaking news is happening, you get the live prices, etc. So that's probably the reason why. And it prompted me to remind me to ask you to make sure and subscribe to the channel, please. Okay, let me see. Somebody else said try rewinding the video and retry. I had to and it worked. Yeah, there you go. It's simply because the market is moving. The market in Europe is closed by now. The market in the UK is closed by now. Of course, in okay. Let me see here. FN was my money maker. Even today, it's holding better than India. Yeah, like I say, everyone was talking about Nvidia, and I get it. I absolutely do. I get it, and it was of course the big one over the past week. But having a search that automates what it is you're looking for when a naturally big event is going to happen. And a big event is the earnings release. Even if it simply meets investors' expectations, there's always activity around it. That's why it makes interesting opportunity as well. That's why this is the time when all of the investors' expectations wound up together and compared to reality. It's always a big opportunity to just really get to understand the stock, and of course then market can. Okay, let me see here. Let me go back. I know it's basic, but can you show how where to save the search? Of course it can, Ben. Of course it can. That you might want. Okay. And now let me pop back here, and I'm just going to exactly how to do that. So here I have got this here to Unisearch, and what I'm now going to do is press this save button. Okay, so I'm just going to press this. I'm just making sure here you can see. So it is to draw a big picture around it here, but it's up here, top left hand corner, and it's the floppy disk. Generally, Ben, what I do is that I look for my long searches. Then what I'll do is I'll press save. I'm going to press the save button, and I'm going to save as. One is going to earnings all with fundamentals search. Okay, and in here I'm just going to my long searches. There we go, and okay, and it's a long search. There you go. That's how you do it. Now, who else have we got over here? Don says EBITDA is not part of GAAP, but is commonly used. Yes, it is. It's the reason I bring it up, and I talk about it a fair bit, Don. And the reason I do that is people think it's a big long list of letters, and what does it refer to? Merits understanding it. Indeed, there can often be a comparison as well between GAAP and non-GAAP earnings. Here is my 30 seconds on the difference between GAAP is generally accepted accounting principles. IFRS is International Financial Standards, sorry, International Financial Reporting Standard. So they're two different accounting mechanisms, and they treat certain things differently. One of them treats stock options, for example, of staff who are being paid that in lieu of being paid a direct salary. I could get super technical here, but my point is that you're looking at two different accounting systems, treat things different, that eventually wash out. Okay, Ben says loves getting alerts. That's great. Great to hear. Don says, would share buybacks possibly indicate the company does not see investment opportunities? Could do, Don, yeah. It could do. It may be the case. It may also be an alternative to starting a dividend or increasing a dividend or maintaining a dividend. It may be that it doesn't see mergers and acquisitions. It may be that, certainly we saw a lot of it over the past couple of years, is that due to interest rates being as low as they were, then as a result they needed to find different ways of doing things, and certainly buying back your own shares boosts the earnings per share and follows on from there. Let me see, Nvidia not looking good today. Now, right, let's just take a look at Nvidia for a moment. Let's just I'm going to show you when I looked at Nvidia first today about we'll go back to just today. Yeah, here we go. When Nvidia opened straight away this morning, it was like it jumped up, it jumped way, 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 way up. And so I was looking at this morning, it was around about 4% up at this stage. So as you can see, it has leveled off a little bit. But on the other hand, I'm also just looking here now. It looks like if I was to extend a line, get an extended line here. Okay, I'm going to take the bottom of the graph. This looks roundabout accurate. Roll in a little bit more. Okay, go. Now, this is what I would be looking to see where this is, if the price drops further, if it breaks down here, then looks like it could go further down. But on the other hand, at the moment, looks like Nvidia is turning, bouncing off this line of support here. That's personally what I would be watching if I was trading Nvidia, which I'm not. But if I was, that's the line I'd be watching. Okay, a lot of profit taking, says Ben. Yep, that's understandable. Earnings and Fed move the markets big for sure. Can you please explain why you chose RS and VST values? I can, of course. Hop on over here. Okay. Personally, I always like for VST above 1. I don't see why I need to accept any less. VST, value, safety, and timing. I like seeing the combination greater than 1. That's what I personally want. I want to see that the fundamentals and the technicals together are on the better side. Okay. Now, also bear in mind if I see a stock in VectorVest that has a buy recommendation, it has to have VST above 1. It has to have RT greater than 1. Price needs to be stop price, and price needs to be diverging away from the stop price as well. So because of, of that, I also that gives me guidance that I do want to see VST above 1. When it comes to RS being above 1.2, it's a preference that I like to see consistency and predictability of financial performance. I am somebody that likes to buy stocks with dividends. I like to sell stocks. I like to sell options stocks. I like stocks that can demonstrate consistent growth. I suppose if I'm trying to think whether I'm a more defensive investor or cyclical, I actually probably don't discriminate between the two, but I do want to be able to invest. I'm not looking for a stock that's a rocky road. I'm not looking for that. I certainly have sold options and stocks with a lot of volatility around their earnings, but I'm not looking for volatility of earnings. I would like to see and predictability of financial performance. And finally, if I'm buying a stock, I do certainly want to see the buyers are winning against the sellers. If I'm on the ups, if I want to, which of course any buyer does, wants to, if I want to buy a stock with a view to selling it at a higher price, I want to see that the RT is above 1. And that's, yep, I think there now I have, in fact, answered all questions. So on that note, I am going to hop back over here and I'm going to say to you all, thank you very much indeed for joining me today for this episode of Savvy Investors. Like I say, my objective was to show you how to automate the ways in which that you're looking at the market, but then secondly, how to make sure that what you're automating, finding what you really want. That is, if you are interested in earnings reports, you know where to find them for a start, and then secondly, you know how to find the right ones. Then when you get into them, dig into the Q&A and just make sure that you get in. So I am going to see you all next month for the next episode of Savvy Investing here at VectorVest. As I say, thank you all so much for joining. Please do subscribe to the channel and like the episode. We would love for that to happen. If you have been looking at this and it's not live, of course, you're super welcome to. And similarly, like it and make sure to subscribe so that anytime we go live, you'll know about it. Thank you, everyone.